about moments ago that we would have a professor with us from the Belk College of Business, and it is my pleasure to introduce that professor, Mr. John Connaughton. I hope I'm saying that name right. You can always let me know if I mess that up, so I'm sorry. Mr. Connaughton, but it's great to have you here. We did want to talk to you about the tariffs because big news today coming out that the president is going to pause the application of some of the tariffs for more than 75 countries, not China though, raising that to 125%. So let's start with the big one. What does this mean? We've seen the markets fluctuate over the last, not just week, but couple of weeks. A lot of folks are watching this, right? I'm looking at the numbers on CNBC with the Dow up 40,000 points plus now. So what does this mean for folks who are playing the stock, or I should say, are in the stock market, and for those who have 401ks as well?
Yeah, this is an interesting time. I mean, the market was down because of uncertainty. Some of that uncertainty has been removed. I think, last week and the early part of this week, there was a concern as to whether or not the blanket tariffs that Trump threw on earlier was a negotiating tool, or whether or not it was a revenue raising tool, because he's talked about raising revenue using tariffs. And so there was this uncertainty in the marketplace as to whether or not he was serious about negotiating the tariffs down and trying to create a level playing field, or he's just interested in raising some, as he called it, the external revenue service, and raising some money. It clearly looks like today that this was, for the most part, a negotiating tool. And we've seen a number of countries come to the table, and it's probably good news. And we haven't gained it all back, but we've got a good part of it back.
That's great to hear, Mr. Connaughton. I appreciate that. So I'm going to kind of rifle off a couple of different questions, not in order here, but one of the biggest ones that I think that comes to mind is the fluctuation, what this could mean, and there's been some discussion, not necessarily from anybody on the Hill, in Capitol, on the Capitol, but just in relation to manipulation of markets. And I'm not saying the president is doing that, but it seems like folks may have some reactionary impulses to this as they start to look into what their 401k or maybe their money is actually doing day by day. What would you say to that? Because it seems like, as you had just said, it seems like a technique that he is using to try and get countries to the table to get better deals for Americans. So where are we in that discussion, and what does that look like?
Okay, there's a couple of questions in there, so let's see if we can unpack that. First of all, as far as people's 401ks are concerned, I am not a financial advisor. Always talk to your financial advisor, but my advice to most everybody is sit back, take a deep breath, try not to look at it every 2 or 3 hours. I think that regardless of where we're headed in this will work itself through over the next 6 months or year at worst, and maybe the next couple of months at best. Okay, so I think that everybody needs to take a breath on that. I think the second question is, and I think this is something that's important. We have had essentially trade imbalances with most of our trading partners for the last 70 years. When it made sense for political reasons, while there was a Cold War going on and making sure we lined up allies, etc., giving them unfettered access to our markets where they could run a trade surplus made some sense. But for the last 30 years, it really hasn't made any sense. And, I'll not disagree with anybody who suggests that Mr. Trump has been rather bold and bombastic in terms of his application of these. But the problem is that we've been talking to these countries individually, off and on, for the last 30 plus years about trying to do something about leveling the tariff and non-tariff barriers to American products, with little or no success, because they don't have to do anything, because there's never been any cost to them. And running a trade surplus with the United States and having unfettered access to our markets was a great thing. The problem is that if you look in the last 25 years, we've lost 70,000 manufacturing facilities in this country, plants closed. Now, if you live in Charlotte, or you live in Raleigh, or Austin, Texas, or Washington, D.C., the last 70 years where we've been running trade imbalances has been fine with you, because you've been able to get very, very cheap products. Everybody here has an iPhone that costs a lot less than if it were made in the United States, and that has benefited us. But if you live in small towns throughout the Midwest and in the Southeast, you have seen manufacturing plant after manufacturing plant close. These towns typically rely on one or two manufacturing plants. They're populated by local citizens, high school degrees. They've been doing it for 15, 20, 25 years, and all of a sudden, factory closes, they lose their jobs. And a lot of other small businesses in that community also wind up folding. Okay, so there's been a small benefit to a large population that live in urban areas on the coasts resulting from this trade policy. But there's been an incredible burden on a few folks that live in more rural areas and smaller communities that relied on one or two manufacturing firms, which are no longer there. And there are no other options for them in terms of jobs. And the communities, if you drive through this country, not many people do, they tend to fly over. But if you do drive through this country and you go to small towns and you stay there and you take a look at how they've changed in the last couple of decades, it is troubling for sure. Look, Jeff, the president, he may talk like he's going to get those 70,000 plants back in the United States. He may get a few, but he's not getting 70,000 back. But I think this is more about not losing another 70,000 over the next 25 years.
That makes complete sense, especially obviously for those that need that work, that need that ecosystem in those small rural communities.
Sure.
So let's talk about some of the numbers, right? One of the questions here is we've got Jerome Powell and the Treasury Secretary, the Treasury themselves trying to get inflation under control. There's been numerous reports on that. All the while, people are talking about prices could go up on lots of different things. Autos, like you were kind of saying, in some respects, not everything, right? But certain imports. So what does that look like for Americans on prices in terms of the economy and going forward, and how that might play into inflation? Prices still don't seem to be great on everything. We've seen prices on eggs come down a little bit as well, but can you give us a little bit more expert advice on that?
Well, I think we have seen inflation come down over the past 2 years from a peak of 9% on an annual basis to the low 3% now. We've been sticky for the last 4 or 5 months, independent of tariffs or anything like that. One of the things, and I got to look real quick to check this out because I haven't checked it out since earlier this morning. So bear with me 1 second while I take a look at something here. Oil is down now to $63 a barrel. Okay. And that drives a lot of the inflation. And so we've had not just disinflation, we've had deflation in oil prices, and that's going to factor in. Despite the bump today in the stock market, oil is still pretty low. It's come down a good $10 since last week. So consequently, that's going to start factoring into gas prices. And so we may get a read in the March, in the April CPI, which will come out in early May, that we might be down to 2% because of what's happening in oil this month. Okay, so as far as tariffs are concerned and their impact on inflation, two things to remember. Thing one, inflation tariffs are not sales taxes. So while you may say we have a 25% tariff on, say, a 6-pack of Modelo Especial that comes in this country, it's not going to jump from $10 to $12.50. It's going to go up, but the tariff is not applied to the retail price that we pay at the supermarket. The tariff is applied to the last sale out of Mexico, i.e. when it crosses the border, which may be $4 or $5 a 6-pack. Then when it's in here, you've got transportation, you've got marketing, ads, etc. Profit margin at the supermarket, profit margin for the local distributor. All of those things enter into it. They all have elasticities of supply and demand. My best guess is that it may go up 50 cents, maybe 75 cents on a 6-pack of Modelo Especial. But Modelo has to think about this because they're number one selling beer brand in America right now. Do they want to lose market share by raising their price and make it more expensive than, say, Bud Light 6-pack, which is also $10? So a lot of things go into this. You don't know until the tariff actually works its way through the system and has been in place for a couple of months, you don't really know what the price increase will be. Whatever the price increase is, it's a one-time price increase. It's not an ongoing. Beer goes up to $10.75 a six-pack. That's it. We're done. It's $10.75 ongoing unless the tariff is raised again or the tariff is reduced.
Well, it's been interesting to listen to you and listen to, obviously, some of the industries that this could potentially impact. We had been talking about coffee, people that own coffee shops, right? How that might affect them, and maybe, bracing for potential changes. And so it is good to hear that folks just need to wait and see how this is going to affect them. I know that that's easier said than done in today's America, obviously, but great advice there. There has been a specific claim, and I did want to ask you about this just to see, because we here at WCNC Charlotte have also been trying to verify this. The president had said that through these tariffs, the U.S. will rake in about $2 billion a day. Where are you on seeing that? Is that true? Can that be proven?
Well, it certainly can be proven, but not in the short term. Look, again, how many people in your audience, maybe you yourself, have been to Charleston or Savannah or something like that? One of the tourist things you do is you tour the custom house, right? Well, the custom house has been there forever. And when ships come in and product offloads, historically, that's where the tariff was paid. It was paid at that point. So, what we've had is since last Wednesday, we've had tariffs in place for ships that came into port after 12 midnight on Wednesday last week. I guess that was the 2nd, I think. And so, when those products offload, the tariff gets paid. It's really that simple on the basis of the last sale price at the port where it got on a ship and came here. What we don't know right now is how much those tariffs have been collected. They're not collected in the custom house anymore, but it's all done electronically, obviously. But we don't know how much has been collected, and we don't know how long some of these tariffs have been in place. One of the things, Jeb, that we don't know, and I've been asking this question and searching for it, is how many ships have rolled on into American waters Wednesday, Thursday, Friday last week, Saturday, Sunday, and decided, wait a minute, let's just sit offshore for a couple of days and see if this stuff starts to come down. Because obviously now, if you docked your ship yesterday and you are subject to tariffs, that's a big hit compared to the guy that was smart enough to dock his ship today. And gee whiz, no tariffs if you're from one of those 70 plus countries that have seen tariff relief because of their willingness to come to the table and negotiate.
Interesting. So it seems like, right, 4:00, the market's kind of just closing here. And I'm seeing on CNBC that NASDAQ, it is on pace for one of the best days since 2020. So we've seen the growth today. And I know, you may not be a forecaster at heart, but if you would, what do you think may happen? I mean, obviously it's going to be contingent, right, on any announcement that the president seems to discuss over the next 24 and 48 hours. But will we see the stock market continue to grow the rest of this week? I mean, I guess that depends on what the president says, right? I mean, am I okay to say that?
Jim, if I could figure that out, I wouldn't have to talk to folks like you and get a monthly paycheck. Who knows? Who knows what's going to happen? There may be some profit taking now that the market's up considerably. We may see, folks jumping in. There's still a lot of uncertainty. And remember, 70 plus companies have come to the table and have been, put on sabbatical, if you will, for a couple of months while we sit down and talk. We don't know how those talks are going to turn out. We don't know if other countries are going to come to the table. We just don't know. There's still a tremendous amount of uncertainty. And just like earlier this week, the president comes out and says, well, China retaliated to our reciprocal tariffs, in his words. So we're going to slap another 50% tariff on China. Market crashes, right? Then today he comes out and says, well, we're going to relax the tariffs on 70 plus countries while we work with them and work out an agreement. Okay. Do you know what's going to happen tomorrow? what's the president's going to say? Are there going to be more companies that are countries that are willing to come to the table and get that 90-day reprieve? Is China going to come, or are some countries going to say, nope, we're digging our heels in and we're going to actually up our tariffs? It depends on, the negotiations are like elementary hoop mechanics. In every negotiation, somebody's holding the hoop and somebody's jumping through. And in some of these negotiations, we're still arguing about who's holding the hoop and who's jumping through the hoop.
So more time needed, obviously, to see where these tariffs go. Mr. Connaughton, anything else that maybe I'm missing that you wanted to share, talk about, maybe give some advice to those that are listening right now? I wanted to give you the opportunity for that.
Well, we've seen a lot bigger crashes in the market than this. I'm old enough to remember October of 1987, called Black Monday, when the market lost 25% of its value in one day. So, we lost 13% over a week. So we're not into that category of, oh my goodness, what do I do now? The advice that I gave earlier this week and last week was, everybody just sit back, take a breath. We're not sure where this is going right now. The worst thing you can do is try to act. Now, if you're a player, you probably bought in this morning before the president said anything, and you got a big, let's see, what was the hit today in terms of percentage? Almost an 8% jump. Good for you. But most people aren't that savvy to be able to take advantage of that, or frankly, that risk taking. They're not comfortable with that level of risk taking. I know I'm not. I haven't made a move this entire week.
That makes total sense, and I'm sure there are a lot of Americans in the same boat. So for those of us that are playing this long game, good luck to everyone out there. Again, Mr. Connaughton, thank you so much. It's great to have your expert advice on the Impact News stream here on WCNC Plus.